All right, everybody, here we go with Opendoor Technology again. And today was a decent day. It was pretty much a consolidation day from the previous day. And when we came down today, we came down to a price that was actually pretty good. I'm going to show you the chart. I'm going to show you two websites that I saw had interesting information, and the other one had interesting data. And I was surprised Opendoor didn't go up more today. But the reason why is because it went up so much the day before. But I think we can probably see that price increase on the data that we received today. I don't know if it's going to be tomorrow or next week, but the data was actually positive, but it didn't really make Opendoor go up too much. But it's okay. It's okay. Let's look at the chart, and then we'll show you the two websites. Here we go. All right, here we go. Start with the weekly, and the weekly candlestick is looking a little more smaller, the body. And that's because we have indecision. 1087 is the high, and the low is around 875, and it actually hit my support area right on the money. 875. It looked like the tail end is touching 875, and then the resistance that I drew, it kind of went past it. But we hit the support pretty good at the 875 for that weekly. Let's check out the daily. Chart looks decent. There's no negativity in this chart. We had a big run here, and then we consolidated for 3 days, and then we had another big run on that fourth day because we had 3 red days, and here's a fourth day right here. And today, there's the candle for today. It's a doji candle, but it's actually above the middle of the recent candle, so that's actually still bullish. For it to be like an actual consolidation day or an average day, we would have closed at around $9.52, which pretty much where's my support is at, $9.52. It's pretty accurate. I didn't have to draw a line; it's already there because that 9.52 is right in the middle of the body of this candle where we pumped when we went to 1087. That 9.52. So we could go down to 9.52 if we did tomorrow, if we came down a little, and it'll still be a good candle. A good trend, even if we go to 9.52. If we go down toward $9, then that would mean that we're kind of in a downtrend, but not a real downtrend. It just means that we are in consolidation phase, but a lower area of consolidation. If we can consolidate between $9.50 and $10, that's going to be bullish right there, between $9.50 and $10. So people who wants to see the stock go up to $10.50, $10.87, $11, $12, $13. It can come, but we got to be more patient. Patience is key. Long as the company is doing what it's supposed to be doing, we can get there. I think it's my opinion. $11, $12, maybe next week. Long as we keep getting good news and then having some consolidation periods, it can slowly but surely go up. Reason why I said we should have went up today because we had some decent data. I liked it, and it didn't go up. And it's probably because it's what I said earlier. We had this big, huge candlestick, and people want to profit take. So when the news came out, and the stock market had a decent day overall, record highs in the stock market, everything was going up. But Opendoor wasn't really pushing up too much because people were profit taking. That's my opinion, and I think that's what was going on today. I was very surprised, but I was also surprised how well it held up. It held at $10 really good. It kept going down and it came right back to $10. And as you can see, times in sales, $10 mark. And here's the hourly. We were actually at 1060 after hours, and then we slowly came down, and we consolidated right at the $10 support. Right at $10 support. And that's where we pretty much were at all day today, at $10. It dipped briefly right here at around, 3:30? And then it came back up again. That dip right there is probably manipulation. That's my opinion. I think that dip went down to 978 and then came right back up within minutes, I think. And I think it's manipulation, trying to scare people. Oh, it's going down $9.50, $9. And then as soon as you sell, boom, came right back with $10 again. So, clear the weak hands. That's what they're doing when they do manipulation. I'm going to give you a quick example of manipulation right here the day before. As you can see right here, look at this. Pre-market on September 17th, it was pretty much trading at $9, right? And then it went to $8.41. It probably scared a lot of people. $8.41. And then once people got scared and sold their shares, right, pre-market, look what happened. It went straight up, and it kept going up to 1087. So weak hands got shook right here. That's an example of manipulation right here. And here's another example of profit taking slash manipulation. It went to 1087, and then it dumped down. Well, we did have the interest rate cut, and Jerome Powell speaking here, but people were shook. People were shook right here. I guarantee it. I don't know who sold, but people were shook. We went to 1087, and they came all the way down to 927 within about 30 minutes. And once people sold, what happened? It brought it right back up where it was consolidating again. Right here. Here's the consolidation area for yesterday. And what happened? It closed right at consolidation area. So this was a dump, profit taking slash manipulation, and then it just came right back up to consolidation area right here. From here to here. Same area. And then it continued to go up after hours, came down some pre-market. But look, if you look at today's action, it almost matches the action here and the action here. So that's more evidence that we're consolidating right there, and we can stay above $10. That's great. I like that. That's pretty good. So let's look at the 5-minute real quick. I'm not going to talk about too much of the price action, but we're going to look at the volume on the 5-minute. So right here we had a lot of volume right here when we first opened up. A lot of up and down. People were buying, people were selling at the same time, and it came up. It pumped up, but it just came right back down to the consolidation area. And we had a lot of volume right here in this area. And that's how I knew, that's where the support is probably going to be at for today. Around 12 o'clock, I knew, this is where we're probably going to close at. Because of this volume right here, I peeped out, at around 12:30. And did we close it at volume? The bottom, 995, right? And where did we close at? We closed at 994. See? There we go. And that's why I'm saying you can get hints and sometimes clues throughout the day if you can, if you know how to read your volume and you know how to read price action. If you want to learn yourself how to read the chart, read the volume, subscribe to the channel. And I'll start making some videos teaching people, investors, on the knowledge I've learned and gained throughout the years. So subscribe, and join the Discord. Get a lot of information out of there, especially for Opendoor right now. And once again, we're going to check the housing stocks and see what they did today. Consolidation day for ITB. Lennar consolidation then dropped big time after hours for some reason. Don't know why. Lennar pretty much been on a downtrend. Look like for Lennar, I don't know what's going on there. DHI, DR Horton, pretty much a downtrend as well. It probably going down because of the data. Actually, I said I didn't know why at first, but I forgot. Some data report came out a few days ago or a day ago that building houses is starting to become more sluggish and it's starting to slow down a little bit on building houses. So that's probably why DR Horton is in a downtrend somewhat. So we had this downtrend here. Lennar, same downtrend. Housing ETF, same downtrend. And let's check out Open. Let's see what happens here. We're not in a downtrend. Not really in an uptrend just yet. But we are consolidating. So our consolidation is actually doing better than the housing stocks because they're actually in a somewhat of a downtrend right now. 180. It went from 185 to 169. But we're kind of holding steady. That's why you can't write off Opendoor just like that. Even when the housing sector is doing bad, Opendoor is just consolidating and waiting and building and building and building. What happens when the housing stocks start to do good again and goes green? You might see a pump from Opendoor. So gotta watch out for that. You gotta watch out. All right, let's look at why I said I was surprised Opendoor didn't go up today. But it was profit taking, so that's probably why it didn't go up. It was pretty much held down because of profit taking. So the housing market actually had some data at 12 noon today, Eastern time. And previous interest rate for a 15-year mortgage rate was 5.5%, and now it's 5.41%. The previous interest rate for a 30-year mortgage rate, 6.35. Now it's 6.26. So it seems like every time I make a video, the interest rate goes down. It just keeps going down every single day almost, or every other day. I just reported that it was at 6.35 the other day, and before that, it was at 6.50. So it went from 6.50 area to 6.35 to now 6.26. I think that was within like a week or two. It dropped that fast, 6.50 area to 6.26. So yeah, the monthly rate for these houses is going to come down a lot, and people are going to start being able to afford these houses the monthly. The housing prices may come up a little bit, but it'll be more attractive for home buyers because the monthly rate for these houses is going to be down. So even if the house costs a little bit more, it'll still be affordable. It'll still be affordable. And that's what people are looking for. Even if the price of the house is kind of high, if the monthly rate is within their budget, they're going to buy the house. So Opendoor needs to be right there and get these customers. And if they can do that, Opendoor, sky's the limit, just like I said yesterday. So here we go. Some information from AOL. I haven't seen them in a while. AOL, been around for a long time. So yeah, recent results show progress and pressure. So it says, investors don't have to guess about the near term for Opendoor because in the second quarter of 2025, Opendoor delivered $1.6 billion in revenue, up modestly year over year. That's good news. The revenue went up, but the guidance, from the ex-CEO, the guidance was bad. And what she said wasn't great either. And now she's not here anymore. She's maybe got another job. I don't know where she went to, what industry she went to, or what company she went to, but it doesn't matter to me. But look, the guidance then turned the spotlight back to reality for the third quarter. Opendoor guided revenue down to between $800 million and $870 million for the next quarter. It says management also called out a mixed headwind from older, lower margin homes, given Opendoor's low acquisition volumes, with contribution profit expected to compress from the second quarter level. That combination, a momentary profitability milestone followed by a weaker outlook, is why this remains a numbers story, not just a leadership one. So here we go. It's a numbers story. That's why I said we got to look at the next earnings. But the projected earnings for next quarter, because it was guided lower to 800 to 875 million for the next quarter. So since the guidance was pulled down to lower, so just imagine if we break the guidance of the 800 and 875 million, that's going to pump the stock up right there. If we have a larger than expected revenue based on this weaker guidance, that's pretty much going to make the stock go up, in my opinion, of course. So if our earnings look good by beating the lower projected 800 to 875 million guidance, that's going to be a positive. And then we have a new leadership, which is pretty much experienced about how to run a company, especially in that direction for AI. I think this CEO is going to be really good for Opendoor. So there you go. There you go. A good earnings, a good CEO. And as long as we keep having good data from the housing market, which is pretty much almost guaranteed, Opendoor is headed for the right direction. So the only thing that's really holding back Opendoor is those numbers, the earnings. So imagine if our earnings are good, the CEO is good, and the housing market gets back on its feet. Everything comes full circle, and you have a stock that can go much, much higher, 15, 20, 25 plus, because everything is there. We beat expectations by a little bit or by a lot. That's going to be good, and it's just going to keep going up. And if a lot of people are shorting Opendoor during the time of its earnings, it's probably going to squeeze. But, you got to have a good earnings. Everything depends on how fast the housing market gets back on its feet. That's it. That's pretty much it. And, of course, the CEO and the management, needs to properly advertise the business, make some commercials, radio, and get some people on the app. So that's why I said the next earnings for Opendoor is going to be probably the most important earnings it ever had in history for Opendoor. The next earnings, especially with all the spotlight on Opendoor, everybody is expecting to see Opendoor earnings and see if it can live up to the hype. All right, everybody, you know what to do. Subscribe, like, comment if you have any questions, and keep liking the video. I'm getting a lot of likes now. Thank you so much for all the likes you've been giving me. It's helping out a lot. And Opendoor, let it keep going up. Open Army, right? Open Army, let's go.